Hey guys, this is Tony Benson with Wealth Builders HQ and creator of Patterns in a Flash. Gonna go back and review the patterns of the week from a couple weeks ago. I was on vacation last week, so I did not do any of those, but let's go back and see what happened I had 5 the week before. So we'll go see what happened with those and check in on any ones that are still on the radar. Before we get there, I gotta do the disclaimer. Getting a little excited, talk a little too fast. I'm not a registered working investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do mention a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So with that being said, these are the 5 that we looked at the week before. Affirm, American Express, CCIV, that's Churchill Capital, NIO, and then Occidental Petroleum. So let's jump right to the charts. And let's see, this was on the 14th. I forgot to put vertical lines. The 14th is when I recorded, so that's when we looked at it. This one, actually, this is NIO. And was looking at, obviously, the possibility for a bullish run here, a little roll reversal on this previous high. And it looks like it may have hit and then stopped out. It did. 2 days later, it hit and then stopped out the next day. It's a risk of trading, right? So, but this is what I love, actually, and I know some of you are going to be like, wait, you lost money. That doesn't make any sense. Why would you love it? First of all, well, it didn't trigger for a couple days, but it hit here, right? It triggered, and the next day it stopped out. So, yeah, you took a loss, but you know what? It took 2 days. Now you can go on and find something else that maybe you could make money on, right? I'd rather take a little loss, and we're talking, what's that, about $1.40? I mean, talk about $1.40 loss. If you're trading an option, you're probably losing 75 cents or a dollar. You know, even if you did 10 contracts and you have a potential for $3,000, you only lost 500 or 750. You know, just ballparking it. But the reality is that you got in and out quickly. Now you can deploy your capital somewhere else. Whoops. And find something that hopefully will work out and you'll make $2 or $3 grand on, right? That's one thing I've said. I remember saying it the other night. I said, you know what? When you get to a point where you take a loss on a stock, where you create a plan like we do here, you get into the trade goes against you, you stop out, even if it's the next day, even the same day. When you can get excited and be happy that you got stopped out, then you've arrived as a trader. Now, I don't usually jump up and down for joy and be like, oh, I'm excited, but it doesn't faze me anymore. It's like, okay, I got stopped out. Whoop-de-doo. Because I got 3 or 4 other trades on, and if one of them hits, then that's all I need. If I make $3,000 or $4,000 on one trade, I lose $500 on 3 other trades, who cares? If I lost $500 on 3 trades, I lost $1,500. I hit $3 grand on one trade, I'm still up $1,500. And I'm only 25%. 1 for 4 goes in my favor. I'm still making money. That's why I don't care anymore. When you use risk reward, it doesn't matter. All you gotta have is 1 or 2 out of a bunch of trades you do. They hit big, they hit the target, you make 3 times as much as you risk on the other ones, you're still coming out ahead. It's beautiful. When you get into that mindset and you're like, I don't care if I lose money on this trade because I got 3 other ones over there, and as long as one of them goes well, I'm fine. When you get to that mentality, you've arrived. And then you can trade without fear, or with minimal fear, I should say. You're never going to trade without fear. With minimal fear, you don't worry about things anymore, and you get excited when you get stopped out because now you can deploy your capital into something that might work. There you go. So here's one, Affirm. This one triggered. Where's the 14th? Right there. So this is one we looked at, kind of a little double bottom. Maybe you could even call it ascending triangle, whatever you want to call it. The end result is the same. I remember it triggered this day. Of course, it went up. Hit I remember putting a contingent order. I actually traded this one. It hit my contingent, entered me, and then turned around and dropped. And I'm like, okay, just relax. We're still in play. 22.49 is a stop. Just let it be. If it stops you out, who cares? No big deal. Right? I've gotten stopped out a lot in the last few weeks. It's rather frustrating because you have a nice big giant gain and then you start to get stopped out a bunch and you give some of it back and it's like, and you see where you were and then some of it's like drifting back. You're like, because you want it just to keep going to the moon, right? But a drawdown, a pullback in your account is no different than a pullback in the stock, right? It happens. You know, as long as your account is trending higher, that's the ultimate goal. And I've had a little bigger pullback than I like, but it is what it is. You know, you got to keep swinging the bat. You know, you got to go through cold phases, and you're going to have times where, you know, things just aren't hitting. It's just part of the business. But this one did trigger it there, and then the next day it gapped up a little bit. I was like, cool, and then it dropped off. It's like, am I gonna hit the stop? I had a contingent order out there for the stop, and I just let it go. That's usually what I do. Just let it be. By the end of the day, it was up a little bit. I was like, awesome. The next day it gaps and runs, and I'm like, sweet. I threw an order out above the market for part of the position. I said, okay, if it hits this number, I'm going to bank some profit, reduce my risk. Everything's good. The next day it dances around. I'm like, okay, I'm going to put a stop. I put a stop. The following day it gapped down a little bit. I put a stop below the low of this day for the rest of the position. I can't remember how many I had left. I think I had 3 contracts left. I think I started with 8 or 10. And I sold half or a third or something like that here. I think I might have taken more out here. I don't remember exactly what I did, but I do remember putting a stop I'm going to go just below the low of this day. And if it triggers that, I'm going to get out. And I think I ended up making $200 or $300 or $400 here. I don't remember exactly what it was. I didn't go back and look and calculate it. I usually don't. I don't have time to do. When you trade, when you're doing 3, 4, 5, 8, 10 trades at a time, swing trades, and then, if a day trade pops up, you take it. I mean, some people like to keep tedious records, and I'm not one of those. As long as my account's growing in the long term, that's all I care about. It's almost too much. I probably should, and I have contemplated over the years, and there's periods where I did it, and I got away from it. Maybe I'm just not disciplined enough. Maybe I just, like I said, don't care enough. As long as the account's growing, it doesn't matter, does it? But I have, and at times from a coaching perspective, it's good to be able to show people numbers. But then again, I mean, what I do doesn't matter because it doesn't necessarily mean you're going to duplicate it, right? So if I show you all the numbers and say I did this, here's how much I made, $350 with $1,000 risk or $2,000 or $10,000 or whatever it was, it doesn't really matter because what you're doing, what you're working with is different than me. You and I are not the same. We may trade similar, but it's different. My goal here as a coach is to do concepts and to show you ideas and thoughts of how you can manage your individual trades. That's my goal here, is to show you patterns, mindset, how to trade it, where to get in, where to get out, stops, basically the core concepts of trading, what you can and can't do. But it's your business and you've got to run it the way you want. So me showing you a bunch of numbers isn't going to do any benefit for you. And I've done it in the past. I've shown things. It's like, it's, to me, it comes across as bragging. I see a lot of other coaches. It's like, oh, I made $3 million in 2 days. It's like, okay, so what? Can I do that? And the answer is maybe. It depends on, there's so many different variables and so many factors. It's hard to say where you're at and what you're doing. So I try to stay on the core. But anyway, I'm glad that I got out of there because had I held on, I would have given all my profits back. And I salvaged some of them. So, and right now it's in a position where maybe there's another trade. It's hard to say. American Express. So here we go. So far, right now, NIO got stopped out. I don't know what, it's what, $1.20. So maybe 75 cents a loss. Affirm worked out. It didn't hit the target, but it went decent. I mean, we got 25.83 to almost 30, about 5 points. So it was still a healthy profit. Realistically, those two would have been about a wash. I did not trade NIO. I did not actually trade this one, so I don't know what the actual loss would have been. I'm just guessing off of 22 years experience. But I did trade this, and I don't even know what my gain was because I didn't go back and look because I scaled out like 2 or 3 parts. So I don't, like I said, I'm not OCD about that anymore. I used to be to a degree. American Express, I don't think this even hit. Where's the 14th? There it is right there. So that's the day I highlighted it. It did not hit there. That's the day that we talked about it. Right? So it would have had to drop below and hit it the next day, and it didn't. It gapped up and went up. And this was earnings related. It ran up in earnings. They came out and said good things, so it gapped. So American Express did not hit. It's not really even viable anymore. Affirm maybe. Churchill Capital, this is a weird one. I don't know why this thing shows up here, but I put CCVI into toss, and it does not give me a quote on this. I stopped watching it. I don't know why. It's really weird. I looked at it like 14 times. I'm going, I have the ticker symbol right. I think it even has the name in there. And it even showed a price, but it did not show any kind of change or fluctuation. There was no intraday chart. It was really weird. So this one, if you were following it and you would have traded it, then obviously you would have gotten stopped out. But I stopped looking at it because I couldn't figure out what was going on. Anytime something weird like that happens, I just get it. I just steer clear of it. So I don't know. I'm just showing this because I highlighted it, but I don't know what the deal was with it. It was really weird. So, But then Occidental is another one, didn't hit. Looking at the head and shoulders on this. And there's the day right there. So it would have had to go down. It went up right now. Actually, I'm starting to love the looks of this right now. I'm looking at possibly changing the plan because we've got this resistance level that, and this is what I teach in Patterns in a Flash, okay? And you'll get to a point where you can analyze charts like I do, because here's what I'm seeing, okay? We have a head and shoulders, but while that pattern is important and it is critical, look at this. You got a hit back here, falls off. Comes back, hits here, long shadow, it hits up top, the bears push it down. Hits here, bears push it down, we get a bearish engulfing pattern. All the same level, right? All 6250 or so. We come up here, hit it, fail. The next day it gaps up above it, fails the next day. Here's another one. Long shadow runs up and hits that same area, falls. Here we go, here it breaks through. Pretty solid breakthrough, and then it rallied. And then when it pulled back, what did it do? Roll reversal. It recognized that old resistance as support, rallied from there. Dark cloud cover here, sideways, boom, tanks, drops back below it. Oil gets negative. The only thing that's really kept this not from getting hammered is Buffett's been buying it, right? This move over here, this is Buffett buying into it, or the news coming out that Buffett was buying it. This is probably Buffett buying it. This is the news Buffett bought. Actually, I think it came out somewhere in here, and then it rallied based on Buffett. But anyway, going back to the chart. So we get back below that level. So this turns out to be a false breakout. Even though it was good for a while, it's not a solid one. And we come back up in, we get another shooting star here at this level, right? Here it is again, 2 or 3 weeks later, come up and hit that level, fall back. The next day, come up and tap it almost, bearish engulfing pattern. A couple weeks later, boom, we gap above it, boom, bearish engulfing pattern. A couple weeks later, here we are, we got above it for a day, but then we gap below it, left a little hammer type of pattern, tagged it, fall. Oh, we broke above it, yay, we gap up, oh, dark cloud cover. Yesterday, little doji, right at that stand below level. Today, boom, we gap above it, rally for a little bit. By the end of the day, it drops back below, closes below that 6250 level. In the last week and a half, we have tapped this level. Twice we've closed above it, but every other day we've stayed below that level. We couldn't keep it more than a day above the level. That says a lot. When you learn to analyze charts like that and you go, okay, here's all the signs that say this is getting bearish, then what? Wow, what just happened there is weird. Now what I'm looking at doing is creating a new trading plan that says, okay, that's where that is. And then moving a target up to, I'm not sure where I'd put the target. I'm not going to go into the depths of doing it. That's the analysis process. Now I am in a position where, okay, we've got a solid resistance here. I can create a plan, create a new target, maybe right around here, and jump on a trade here, and maybe take a long-term one that gets me down here. There's so many different ways to do it, right? I'm getting a little long-winded on this one, but I love to see this type of stuff because we do have a very solid resistance level there, and in the last week and a half, it has failed to stay above it with the exception of maybe a couple of days. So lots of bearishness here. Whether or not it follows through is remains to be seen, right? We'll have to wait and see how the market is tomorrow. Now going back, those are the 5 from 2 weeks ago. This is just going back and looking at some of the other ones from the past. Abbott still has some potential. We got that big giant head and shoulders. It's still just sitting right about that neckline. Hasn't really gotten above it. There's another dark cloud cover at the neckline, essentially. If we were to extend this out, right? It's essentially stayed below it except for this one day and, today. So that's one we'll keep an eye on. Billuby, whatever that is. This one never even triggered. We were looking for it to break above that 29. So this is where you're glad you didn't get in and anticipate. You waited to see it break out. That's why I trade breakouts. Baker Hughes. This is a massive double top. We got a head and shoulders here that played out beautifully. Massive double top that I don't love them when they're this big, but sometimes they play out. And here's the midpoint, broke below it. And depending on if you waited or not, realistically, you should have waited for the retracement. You could have. This is where it gets tricky. I'm saying it's easy to say woulda, shoulda, coulda. Because on a big drop like this, I usually wouldn't jump on it right out of the gates if it's breaking quickly because there's so much of a move. It's likely to retrace. I want to see it dance around for a few days like it did here. So when you have a big move like this, whether it's up or down, it's the same thing. I want to see it dance around like it did here. So I most likely wouldn't have triggered an order right here because it's so far down. I would have waited. I would have said, I'm going to wait for a few days and let it dance. And then it comes back over here. And then on one of these days, look at entering. Actually, I don't even know when I guess it was the 14th. Wait a minute. When did we look at this thing? No, this one's been on the radar for a long time. That's right. Those other 5 were, Baker Hughes was on the radar for a while. But here's the other beauty. Let's just say you would have taken it here. If you did take it here and you get stopped out here, and then you get back in and you take it here, guess what? That move right there wiped out the little loss you took here. You just made 3 times as much on this move. This is another reason to use 3 to 1. This is one thing that if you get stopped out here, say you get into the trade here and you get stopped out a few days later, okay, you've lost $1.25, about. You get back into the trade, re-enter, knowing that there's still potential. You get a $4 drop to the downside. You made $4. You lost $1.50. How much are you up? You're still up $2.50. Now that's on the stock price. If you trade the stock, you're still up $2.50 after taking a $1.50 loss. That's the beauty of 3 to 1. It allows you to say, okay, I missed on that shot, but let me swing again. And if I swing again, you swing 3 out of 4 times, and you get one of them right, you're breaking even. Right? It's a beauty. It's the beauty. This is a long one, huh? This is another one, IRT. This is a longer-term one. Actually had a head and shoulders. This is one that you should have stopped out if you did get into this. We had the head and shoulders that broke below it. And this is one that, yeah, it's pretty ugly. It wouldn't be pretty. Well, you would have gotten out because of earnings. So this is probably a break-even scenario, maybe a little bit of a loss, maybe a little bit of a gain. It's just going sideways. I would have exited that on a time basis. Philip Morris, head and shoulders that played out part way. Right? It did break. It broke the neckline in a big way. This is a beautiful trade. Beautiful setup, I should say. And then, boom, the next day it hits the entry, and 1, 2, 3, 4, 5, 6 days, we're already halfway there. I would have scaled out of part of my position right here. At 92, I would have had an order to take partial profit. I most likely would have taken more. Again, I'm saying I would have because this is the way I trade. I didn't trade this one. So the next morning, I most likely would have banked some more profit and then put a stop in there somewhere. So probably would have gotten stopped out here. But this would have been decent. Didn't hit the target, but it still would have been a healthy profit. And Roblox is one that I know we were looking for a bullish move, and it triggered it here. I don't remember exactly when it was. It hasn't hit the stop, but it has not really moved that great. Actually, it did hit the target there 3 days later. So this could have been a good, if you would have grabbed that pop. So, but then again, there's the woulda, coulda, shoulda, right? It's easy to go back and look at charts historically and say, well, I would have gotten in there and then I would have made a bunch of money. And yeah. But until you're in the trenches with the bullets flying, you really don't know if you would have. And that's what you got to be careful. Don't fantasize about what you could have made because you don't know. I'll show you exactly what I showed my students tonight in class. Okay, once a month I do a live 1-hour class in Patterns in a Flash for everybody that has a subscription to the product. When you're here, would you have actually pulled the trigger to get into that trade? And that would have been a good place to get in. But the question is, would you have? And there's the other thing is, if it comes back down like this, let's say you bank the profit there, it comes down. If you're looking at that chart right there, you're going to be like, well, would I get in here again or not? Would I have re-entered at 3660? It's different when you don't know what the future holds, right? So you got to be careful not to fantasize about what you could have done or would have done or should have done because you didn't do it in the time being, right? When it was there when the bullets were flying. So be careful. Don't delude yourself to believe that you would have made a big profit on that because, like I said, you weren't there when the bullets were flying, so you don't know what you would have done. You don't know what your emotional state would have been. So, anyway. So that was long. We had lots to review, but just remember this. If you're going to fail at one thing, fail at quitting. Take care. God bless. Bye-bye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here. And hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.